What's up, Colorado? Chris Lopez here, and today's podcast is going to be answering a common question we get from investors around town. A ton of investors reach out to myself, our team, Chelsea Scott here at Envision Advisors, and say, what do I do with my portfolio? In the market, the last 10 years, especially the last couple years, we've seen crazy appreciation in price and rents. It creates a ton of opportunity and also a ton of equity, which creates confusion and also opportunity on what to do with your portfolio. So that question has been a very common thing we have continually answered and are always looking to provide more and more value. So short story is that at the beginning of this year, we launched our Portfolio Analysis Mastermind, which combined the human advisory that myself and Chelsea done a lot of, along with the brand new software we're using of Propertyllama. And what this does is Propertyllama acts like a very, very, very advanced spreadsheet where we can plug in all the properties on there, get amazing values on returns, and some really cool graphics. And you'll see those in the slide deck and the show notes. But we all know that numbers in a spreadsheet are like half the battle. Having that advisor, having that coach to make sure those numbers match with your risk tolerance and your plans is very important. So that's why we launched the Portfolio Analysis Mastermind, or PA Mastermind, or PAM for short, at the beginning of this year. Today's podcast is going to be the executive summary of 9 weeks where we took over 100 people through the mastermind, through the software, and analyzing their portfolios. And we chunked into 3 major parts. One is organizing your portfolio and identifying your goals. What is your goal? And make sure you have all the data for your portfolio. That's phase 1. Phase 2 is identifying opportunities. What can you do in the current market, and what can we do with the current cash on hand and portfolio on hand? Number 3 is create an action plan. So once you've identified all your opportunities, you know what you're doing with it. So in today's podcast, we're actually taking one of the portfolios we analyzed in the PA Mastermind, and we're going to give you a great summary. So it's an investor with 3 properties, and we run through 4 scenarios. One is buying a commercial multifamily. The next one is buying a fourplex. The third scenario is buying 4 properties between Pueblo and Springs. There's no right or wrong answer. They all have different returns and all have different pros and cons. And that's what we're going to cover on today's podcast. So in the studio, I've got my co-host, Chelsea Scott, who's the Chief Investment Officer here at Envision Advisors and has been a backbone to the portfolio analysis we've done the last 2 years. And she's here to help analyze the portfolio. Good morning, Chelsea.
Hi, Chris. Good morning. Thank you so much for having me today. I'm really excited to dive into the different scenarios we're going to go over today.
I know, this is fun stuff.
Totally. Thanks.
Our second co-host is Richard McGurr, who is he's got 2 hats he's wearing. He's the investor whose portfolio we're analyzing and running scenarios. He's also the co-founder of Propertyllama, which is a software. What's up, Richard?
Hey, Chris, how you doing? I'm doing really good. I'm really excited to share basically all the value that I got from the Portfolio Analysis Mastermind. I mean, it was just kind of incredible having so many options and a clear path forward on my portfolio.
And it also created some really interesting discussions, reactions between you and your wife, Ilona, as you're like, oh, we could do that, we could do that, and opportunities, but also just you guys debating in a friendly way, what should you do as a couple to grow your wealth?
Yeah, I mean, especially when we have actual discrete plans. It's we can do this and it'll look exactly like this, or we can do this and it'll look like this. And it's what kind of asset class do we want to be in? Where do we want to be invested? It was just great.
All right, so we're going to jump into the details here. We got some resources for you to download this slide deck at the end. We're doing another PA Mastermind. So this is chock full of information, and we're going to keep it light on details in the podcast, but for all the numbers, analyses, make sure you download that slide deck from the website in the show notes. And before we go any further, I have to give a quick disclaimer that this information is designed to provide accurate and authoritative information, but we are also not financial experts, CPAs, tax people, so always make sure you talk to the appropriate people on your team to get the best advice. So starting into here, we need to go to phase 1. What are your goals and what is your current portfolio like? And what we're seeing on the screen here is actually some screenshots of the current properties you have, Richard. And this has the Propertyllama screenshots and some high-level points here. So you have 3 properties. Quickly give us a rundown on those if you could.
Yeah, so this is the first property. It was actually, so a bit of background. I lived overseas until very recently, until 2 months ago. However, we knew that we were going to move to Denver quite a few years ago. And so we had a good amount of cash on hand around 2019, where we actually made a decision that we would start looking for a future primary residence. And even though we knew we weren't going to be moving for a couple of years, kind of our plan was at the time, we'll buy a house since we have this cash on hand, and then we'll throw a tenant in it, and then when we're ready, we'll move in. And so this was property one. It's the first property we ever bought. I purchased it at just over $500. I put a tenant in it, which is the tenant that's currently in there now. It's rented for $2,850, as you can see.
But, through that, now it's worth way above what you bought for it. It has like $300,000 plus in equity.
Yeah,
which is a lot in your real estate piggy bank.
And when we plugged it into Propertyllama, it's under a 3 cap, which was just kind of like jaw dropping of like, oh wow, this is really pulling down our returns.
Exactly, and that creates equity. Like the Denver market gave you the great return of equity and price appreciation.
Yeah,
which in turn makes this a poor rental, and this is why we look at optimizing it.
Yeah.
So, going back to like the second part of this, identifying goals, and Chelsea, I know this is something that you're very passionate about on working with clients and investors on like helping them to make their goals a reality through investing.
Yep.
So when you look at this in goals, how do you start playing matchmaker and taking goals and plugging it to numbers?
Well, first, I just want to highlight that when you decide to download the slide deck and you look at this overview of Richard's property, it's such a nice, simple layout. I can't say that enough. You mentioned cap rate. If anyone out there is not familiar with cap rate, it's really just how we measure return on an investment.
It's income versus the price of the property.
Exactly.
Very simple efficiency metric.
Super simple. And we just look at these really high level metrics, which is what's shown in this overview. And so that's really what I love about the Propertyllama software, is it literally just gives you that high level. So before I get to goals, okay, I just want to note that in this Portfolio Analysis Mastermind, the biggest aha that I took away from it, that people that I talked to took away from it, was realizing how much equity was in their portfolio as a whole. I don't think people even realize that.
And then the cap rates have gotten bad.
Right. The cap rates have really compressed, and they've really, as a result of this high appreciation, remember that valuation is your denominator. When a denominator goes up, the net result is the number goes down, which is what happened to cap rates. But when I look at this here and I think about it, when we put these properties into Propertyllama, as opposed to however people are tracking their particular portfolio of investments, it just shows you, wow, I have this much equity and I'm 50% leveraged. My loan to value is around 50% and my cap rate's compressed. This is where the opportunity strikes.
Yeah.
So creating the goal could be, I want to grow. I mean, that's, to me, the majority of investors out there, that's their overarching goal. There may be some details in there, individual ways they want to do that, make trades, make a 1031. But the overarching goal is I want to grow. And that's what we started with Richard.
Yes.
He said, I want to grow my portfolio. So when we look at just one property, we realize we have so much we can do with $300,000. That's over $1 million in a new purchase, right? 25% down, you need $250,000 to put down on $1 million property. Yeah. That light bulb goes off with that simple metric. And we realize, like, this is incredible. This is just an amazing transition. So with Richard, the goal is growth. The growth is optimizing and maximizing his returns. You see 3% on your cap rate. You see 50% on your loan to value, and you think, this is not optimized.
No.
Yeah. So, there you go. Yeah.
Yes.
Not at all. No. So, right.
All right. And going to property number 2, and I kind of jumped the gun there going to goals, but going back to property 2, there is a townhome that you own in Colorado Springs as a rental.
Yes.
Give us a quick run on that if you could.
Yeah, so this was actually, I purchased this through Jenny, as everybody here is probably aware. She's the agent down in Colorado Springs, and we purchased this at $217. I believe we closed first quarter 2021.
Okay.
On this one.
And then you also bought a second townhome here just in quarter 1 of this year.
Yeah.
Same layout, same complex.
Identical unit.
Very, very similar numbers. But you bought that one with cash, with the intention of doing a refinance,
which I executed. Yeah,
and you just closed on that like a week or two ago, right?
Days ago.
Yeah. So that is kind of like the current 3 properties in your portfolio, and from a high level, that creates some opportunities on there as to
not just that,
what you can do.
Yeah, I mean, what's interesting, I want to point out, is that one of those properties actually was previously rented at $1,400, and that the tenant is now being turned, but that when we had the Like I had in my head, which is one of the cool things about this Portfolio Mastermind, is that when I bought it, it was a 5 cap. And so mentally I had that marked as a 5 cap. And then I put in the new valuation as part of the exercise. And I'm like, oh, wow. Like even what was a winner last year is now kind of like a B.
So,
and you're like, oh, like.
And I mean, those realizations are what this mastermind was all about, is having those aha moments and looking into the numbers and realizing like, wait a minute, something shifted. And I want to point this out here. So you don't change the slide, but this is the high level look at your portfolio.
Which Propertyllama does. So what it did is that it took those 3 portfolio and then it created weighted averages.
Yep.
So yeah.
And perfect. And I love that. That's your roll up screen right there.
Yeah.
In Propertyllama on the portfolio analysis screen. So you have approximately 1.2 million in real estate valuation at the moment, probably higher because it's going up. It's still on the upward trajectory right now.
I was going to say those valuations are even higher now.
Exactly. So it just continues to go up. Okay.
Yeah.
We had $300,000 of equity in the first property alone. You mentioned you bought the second property in 2021.
Yes.
You bought the third property.
2 months ago.
It's not even closed.
Yeah.
Quarter 1, 2022.
Yeah, it just closed.
So within, let's call it to be conservative, 15 months or so, you acquired 2 more. Within the past 15 months, you acquired about 2 properties.
Yeah.
You now have almost $700,000 of equity.
Yeah.
So that over doubled your equity position within less than 2 years.
Yeah, I was about to say, because I can tell you how much I'm in for it. I'm in for it about 160 for the Highlands Ranch place, and then in a normal situation, you could consider I'm in for 60 each on the second 2.
So about $300,000 of cash
in
into these properties.
And I have now more than 100% gains, as you can see here. Yeah.
And when talking with clients, some people are still in the growth phase. Some people are moving into a hold phase. You're continuing to plow forward.
Oh, absolutely. And I mean, I'm 35. Like, I'm not done.
100%. So in your,
yes.
right. I mean, that there's another number to like bench that on. So you're looking at all of this and you're thinking, wow, with your choice to continue to progress in the past, say, like 15 months or so, you have now over doubled your position on the equity side, which gives you more opportunity to continue that growth track.
Well, and you can actually see here are my goals. They're actually written on the screen.
Yeah, let's run through that because
I think it would be good.
Yeah, so
right
from a high level, like you have 3 properties, lots of equity, lots of opportunity. But what are the goals of you and your wife, Ilona?
Yeah, so these numbers were actually picked intuitively. So it's not like if you were to because it would technically you could say I can back my equity position into a valuation position and it should all be here. I didn't do that. I picked these numbers individually. I feel like it would be a good milestone. This is not the be all end all. Would be 4 million because that would be a large portfolio
in total valuation.
Yeah, that's getting to be a serious real estate portfolio that could support you. Because that's the goal at the end of all this. Let's say the actual goal that's not written here is income replacement, which is income replacement at a high standard of living. So you're talking like $250,000 a year for cash flow. And so portfolio valuation I have is 4 million. Portfolio equity I have as 1.25 million, which that actually those 2 numbers are pretty related because that's about
25%.
Yeah, it's about there.
You want to stay leveraged.
Yeah. So I want to maintain a high amount of leverage. And then portfolio NOI of $250,000, which I just brought back to because something we went over in Pam is that NOI is a really good number that you can look at today that predicts retirement income when the properties are paid off. Right. So this is that $250,000, which I just mentioned. And I didn't even intentionally come up with $250,000. That was literally my what do I consider a good standard of living? $250,000.
Yeah.
So there it is.
I want to bring up a point on that, Richard, as our climate changes a little bit, our investment climate changes.
Yeah.
Those numbers are in inflation hedges.
Yeah.
Okay. When you lock in a rate at 30, a 30-year loan, you're helping to hedge that. You're also, that NOI is going to move with inflation.
Yeah, that's going up.
Rents will go up, appreciation will go up. So that's going to move with, independent kind of the economy. So what 250 is today on an NOI is whatever that looks like in say 20 plus years.
Which would be, I would say conservatively at least double.
Right. Okay.
Probably.
So there you go. Yep. That's a good, that's a good rollover. Yep.
And then, portfolio cash flow today, which I'm pretty far away from. And even in these scenarios, I'm still probably a minimum of 5 years from this goal, as it would be very nice to have $75,000 in cash flow.
Okay.
Yeah. Today. That would be supplementing while I'm still working full time.
So let's talk about, do you think it's realistic for you? Look at your numbers. You have around $700,000 in equity, of which you wouldn't want to tap off. Some of it is your down payment.
Yeah.
You'd want to keep it at 75% LTV overall. But look at your average LTV
the problem
here.
Is banks won't allow you 100% LTV.
Right, exactly.
That's the problem.
Exactly.
Darn.
I know.
I tried.
Yeah. Well, as things stand today, that's not an option. So we're at a 40% LTV. So you have a lot of room. You have a lot of room to move.
Yeah.
So in your opinion,
And I
looking
did
at
not
this,
realize that until I plugged the numbers in.
exactly.
For the record.
The aha, right?
Yeah.
The aha. Looking at this high level, understanding that. Do you think you could make some good progress toward that $4 million valuation goal where you are right now?
Yeah.
Okay.
I mean, you could sort of say at a minimum, if I'm at 50%, I would return to if I were to return to 25, then that number would double. And you could say that it would be reasonable to get to 2.5 million.
Right.
Roughly.
So increase your leverage again.
If I were to fully relever.
Yeah.
And that's exactly what we're going to look through here is we outline these 3 scenarios on how to re-leverage and re-optimize your portfolio.
Yeah.
And in real estate, leverage is a big key to maximizing returns and building that long-term future wealth.
That's the unique aspect to this asset class, I would say, compared to something like stocks, is the ease of leverage.
Mm-hmm.
Great point.
So we're going to run through a couple scenarios on here. And of course, I'd highly recommend you guys look at the YouTube video and also download the slide deck. There are some really cool screenshots from Propertyllama with all these numbers in black and white on there to see. Okay. But we're going to go through 3 scenarios with this in mind. Going to sell the Highlands Ranch property and utilize a 1031 exchange to defer capital gains and lock about $300,000 and change in equity. Going to cash out do a cash out refi on that condo you just bought,
which did happen. So this is all correct.
Yep. And that's going to unlock $500,000 and change to go out there and reposition. So we're doing those 2 moves, and you sell the Highlands Ranch property, and these future scenarios run through are assuming you have those 2 condos still in your portfolio,
which they are.
Why we build these other scenarios.
Yeah, and we don't intend to sell them now. Yeah.
In another year or 2, different story.
Could, yeah.
So scenario 1 is we're going to buy a commercial multifamily, like a 6 unit or so at a 5% cap rate. Scenario 2 is buy a turnkey Denver fourplex. Scenario 3 is buy 4 properties, like 2 fourplexes and 2 single family homes between Springs and Pueblo. Mm-hmm. And we're going to compare all these between the current portfolio and then also these 3 side by side.
Yeah, because in Propertyllama, we were actually able to build these separate portfolios and then get the reports and compare them apple to apple.
Yeah, it's a great point. You can really scenario plan in the software.
Yeah, which we'll see soon.
I love. I love that feature. Yeah.
So there's a bunch of slides here. If you guys want to see all the details of each property, of each portfolio, go down on the slide deck. We don't have time to cover it in all detail. That was 7 hours of content.
There's like 12 properties. Yeah, we don't have time.
So we're going to just kind of jump through and go to the summary page on the slides here. And this is going through about 4 weeks of the PA Mastermind of finding properties, all recent deals using real numbers,
real deals,
real interest rates in Q1 of 2022. Right. And we came up with this table. Lots of numbers. We're going to give you the highlight here. So the current scenario is about a 43% loan to value with about a $44,000 NOI and a valuation of about $1.2 million. Scenario 1 is looking at a commercial multifamily, and we're doing that trade up. You get re-leveraged about 74% LTV, closer to 5% cap rate. Your NOI almost triples to $124,000, and your valuation about doubles from 1.2 to 2.5 million.
Yeah, and I want to pause for a second there, Chris.
Oh, absolutely.
Because that was a big wow, right? That was a big wow. I do want to say one move on the board for you got you more than halfway to your valuation goals. You said 4 million.
Yep.
We're looking at 2.5.
Yep.
Tripled that NOI and got you halfway.
Yeah. And that was to cover what the scenario is. This is a completely selling the Highlands Ranch house.
Yeah.
And then taking all of the cash from that refi. So it would have been $300,000 plus $200,000 from the refi, which did happen. Mm-hmm. And then basically using that as a down payment on a $2 million multifamily.
But I want to pause on this point, okay? Because I want to pull it back now a little. Okay?
Well, I just want to explain what this was.
No, it was great. It was great. It's perfect. Yeah. What I want to do is I just want to pull back a little and now kind of take a more conservative approach, right? So I talk to people about what's called you're in an acquisition period, okay? An acquisition period means that you kind of have to keep your foot on the pedal of acquiring properties for a little bit, assuming you can, right? You have the cash to put out there to acquire property. You did that, and you did that in a really nice manner up until this most recent one you're about to close on, right? You just went boom, 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 1, 2, 3.
Yeah, as fast as I could.
As fast as you could. Now, let's say in 2022, This scenario, I know you like a lot. And if you were on our PAMs, you would have heard how excited Richard and his wife Ilona were about this scenario. They really want to get into multi. He wants to be in that space. We had a multifamily lender on board as well.
And this one was with, though, fixed rate debt, because the multifamily scenario was commercial debt.
Right. That's a great point. That's what I meant. Yeah, we had a commercial, excellent point. And so you wanted to kind of play in that space and, figure some things out there. So let's pull back. If we were in a one-on-one session and we were looking at this plan, my next thought after this would be, okay, so you really went forward and you acquired 3 properties. You built a lot of equity really quickly in a great market environment to do so.
It was a lot of luck.
Awesome, which is great. I mean, the hard work creates the luck, right? So then you did that. Now you're like, okay, I'm going to do a quick trade so I can get into this next space because I want to be there. I'd say, okay, great. Let's take you out of the acquisition phase for a little bit now. Let's pause. Let's learn the lessons in this space. Let's kind of move through this. You are now you took such a big jump. Like, what's that game? I think it's called Sorry, where like you hit an accelerator and you just jump over 20 spaces and you like move. You just hit an accelerator. Or shoots and ladders. You just shot up the ladder. You just did a big accelerator. And so in that acceleration phase, then I would say, let's pause and hold for a few years and go through this phase. And
that would allow the cash.
Rebuild the equity again and go again. So I guess I want to say that because from a planning perspective, I would say like really go through the acquisition phase and then move into the jump, get there, and then let's sort of pause and then get you closer to that 4 million within, say, I don't know, a 5 to 7 to 10 year period.
Yeah, I mean, especially because you can look at the cash on all here. None of these are that great. I mean, that is definitely the weakest metric among this portfolio.
Which is typical
of these options. Which is normal. And then by holding,
Yep.
that cash would come back up.
Yeah.
That would be the plan, at least.
Yeah. Okay.
So scenario number 2 is sell the Highlands Ranch property, and refi the condo, and then use those proceeds to go out there and buy a 4-plex.
At $1.2 million.
About $1.2 million. So, quite a bit lower purchase price than the commercial multifamily. Yeah. But then this is a real property that someone purchased like a month ago or 2 months ago.
Yeah, it just closed.
It just closed.
And that was actual, not pro forma. It closed at it's currently a 5 cap.
Yeah. And so again, these are real deals and real opportunities. So I'm highlighting that purchase price because we're not deploying as much equity because there's more equity deployed there. So returns will be slightly lower. Yeah. But hey, go out there, buy a property. And the pros of that's 30-year fixed debt, all the stuff, and similar LTV, similar cap rate.
Well, and this was $200,000 cash on hand remaining.
Yeah, and that's the thing. You had more, cash on hand, go out there and buy another property as well. Yeah. And so I'm going to highlight that because that's not fully modeled out in here,
right?
Because you have some extra cash to go out there.
Yeah. Well, because I am working some like I got that third. The reason I got such a great deal on that second condo was because I got it off market. It was opportunistic, and so.
Gives you
it's
some
valuable
room to
that
do that
I
again.
wouldn't have been able to make that move if I wasn't well positioned with a good balance sheet. So this one kind of protects the balance sheet a little bit, leaves some doors open versus I would say scenario 1 and 3 are fully committed.
Yeah,
done.
You're leveraged out max.
I'm out.
Yeah.
And so see, that's why I love the scenario planning.
Yeah.
Because it speaks to people's risk tolerances and their comfort levels, right? Some people may want to go into the multifamily space and work in the commercial lending space. If you don't, a 4-plex is another great option because it's still multiple doors. It's still multifamily, if that's where
Similar
you want to
rate.
be. But some people don't even want to go into multifamily. So this third scenario really works in that, gives you all the different options. And it also gives you different leverage options.
And this one, the third scenario is actually very geographically diversified as well.
Yeah, so let's move into scenario number 3 because this was 2 4-plexes and 2 single-family homes. It was a 4-plex and a townhome in Springs.
Yes.
And a 4-plex and a detached single-family home in Pueblo.
Yes.
Mm-hmm.
So different asset classes spread across, a geographic distance on there. Again, that's kind of maxing out the leverage on there. About a $2.5 million total valuation with similar LTVs, similar cap rates to the other scenarios, but maximize the leverage. And 4 residential properties are very different than managing 1 multifamily.
Especially when
one is not better than worse. It's just different with pros and cons.
And one thing we discovered in this mastermind that you ran was basically that people were really excited about Pueblo. we saw a lot of excitement around Pueblo.
I was going to say this. One thing I just would want to add here quickly is that the reason it's neat that we have exposure to both Pueblo and Colorado Springs is that those are two very different markets from an investor point of view. One is a cash flow market, one is an appreciation market, and that this gives me exposure to both.
Well, the other thing is that some of the excitement around Pueblo is also that entry point. The entry point is lower, which is why you can do a fourplex and a condo, 2 fourplexes and 2 condos with the same
I get
cash
like
outlay.
10 units.
Exactly, 10 doors.
Ooh.
Yep.
Whoa.
So the other part of it is
I love your reaction,
it's
Richard.
like the aha. I know.
No, that was like
Big
literally like
aha.
2027. I would have 10 doors, like was my previous planning.
Yeah. So that really that's that accelerator, right? And so then the final point on the Pueblo piece as well is that you have basically locational diversity. So that locational diversity is something that people also like. Like, should I really focus all in Denver? Should I go to the Springs? Should I include Pueblo? Pueblo definitely is locational diversity because while you say Colorado Springs is an appreciation market today, there's a lot of belief and actually builders that are moving into Pueblo that traditionally start early and young in markets. In 10 to 15 years, that will suddenly be a big multiplier for your equity as well.
Because it's just the waterfall of population. Denver becomes
Exactly.
too expensive, they go to Springs.
Very well said. I like
They go to
that. I
Pueblo.
like that. The waterfall. It's usually like the concentric circles, but the waterfall, I like that a lot.
Well, because it's one
It's
bucket
just
gets full,
spilling
and then it
over.
spills into this one, and then it spills into this one.
Yeah.
So through all this, I mean, we are just touching the tip of the iceberg between what the software spits out.
We talked about this for 10 hours.
Yeah,
in
and
the
so
real jam.
we could talk for hours more on this podcast, but we'll wrap up here because we want to keep it very high level and really present that, hey, you have to define your current portfolio.
Yeah.
You have to identify your goals. You have to go through and say, great, based on my goals, my current portfolio, with the market conditions out there, what can I do?
Right.
In Richard and Ilona's case, it was these 3 scenarios. And throughout this, we discussed numbers, but all the pros and cons of each asset class, of being different parts of the front range. And from all this, what is kind of what you and Ilona are leaning towards on this?
I was wondering if I was allowed to tell people what I was going to pick.
Yeah.
Oh, okay.
Yeah.
So here's actually what we
That's the whole
ended
point
up
of this is what's your action plan?
Right.
What are you doing?
So what we ended up doing, well, we didn't end up doing because it's all the action plan, but where we're comfortable with and what our plans are today are that it's a blend of scenario 2 and 3. Well, because as you could see, 2 had a lot of cash left over, so that it was
about 200,000.
Yeah, and so we actually like the $1.2 million fourplex in Denver. Except I would say we would be open to that in Springs or Denver, especially given the inventory situation. It would just be like, well, I'll take either.
Yep.
So a relative, and that would be selling the Highlands Ranch place, which is like a total pig of a property, selling that and putting it
From a rental perspective.
Yeah.
From a pure rental perspective.
Yeah.
Or just property, just a poor rental.
And we forgot to mention that I had never seen that property, and then we went to go see it, and we're not in love with it. And so we're like, no, do we really want to live here? No. And then that was actually halfway through Pam, where we really had like a gut check of, are we going to live here? Are we going to sell this? And then we visited and we walked out, and my wife and I were just like, we have no emotional attachment to this place whatsoever.
I just love, though, that you bought it and now you have all this equity in it. And it gives you more choices for the place that you do love. It's so great.
But also, this is also surrounded. Hey, you bought this plan. You're like, hey, this is going to be our future primary residence.
Yeah.
Great. Sounds good on paper.
Because I'd only seen it on Zillow.
You do it.
Yeah, it looks great on Zillow.
Plans change.
Right.
And this is why we do portfolio reviews.
But look at what you did. You opened your opportunity scope.
Yeah.
I mean...
That's a good phrase.
So wait, to fully
scope,
circle back, so what we would do is we take down the $1.2 million fourplex on a conventional loan.
Yeah.
And then we calculated that you can actually get a conventional loan for about up to 1.8 these days. I think that's what Joe said.
I think it's total purchase price, man.
Yeah,
I'm not quite sure. I'm not sure
that's what I meant. Total purchase price.
Yeah.
That's about where that taps out in Denver at the moment. So we do conventional there, and then probably actually one more townhome that's more or less identical. So a third townhome, because like you can get a just below a 5 for about $300,000 now in Colorado Springs. So we'd pick up one of those. And then my wife would like to then also get one more unit in Pueblo. And so I said for $20,000 in the property, okay. Let's do it.
And this is the whole purpose of everything that we've been working towards for a couple years now, and just, hey, how do we blend numbers, human advisory, and help people understand emotions? Like, it's just so many things are converging here where it's not just what the spreadsheet says. Like, you have reality, emotions, husband, wife,
no, because we left
opinions.
the first Pam and we're like, we got to sell this place. We were like, we were supposed to move in. And we were just like, what?
But this is something that we all love doing. We had great reactions from the vast majority of people in the PA Mastermind. And to really wrap this up, like I said, this is the tip of the iceberg on here. And if you guys want the details, go download the slide deck. It's like 20 slides or so. There's of
like
screenshots.
20 properties in there.
Yeah, lots of information in there. Yeah. Go download it. It's an easy PDF download. We're also planning our next Portfolio Analysis Mastermind. The first one went so well. Yep. Now we're going back and making it better, bring some updates to the software, making updates to the process, just the same thing, make everything better. And we're going to start the next one here next couple of months. So exact details are coming out soon. Go join the wait list, which you'll join once you go download the slide deck. And with that, what we just condensed here in 30 minutes on what Richard and Ilona's portfolio did, that we will do again in the next PA Mastermind.
And everyone who signs up gets this treatment they get an analysis section with Chelsea or someone else on the team like you, and they say, okay, here's your portfolio now. What are the opportunities? Here's all your options.
Yep.
I mean, it's incredible. I mean, I never would have been able to come up with these plans on my own. Like, no way.
Yep.
And this has just been we love it. The investors and clients love it. So we're going to do more of these and just get better and better. And through there as well, if you want to go out there and create a free account on Propertyllama, the software that helps analyze all this, go ahead and do it. It's portfolio.denverinvestmentrealestate.com, which is a super long URL. Just go to the show notes, click it, it'll go there. But if you want more information on here, just download it, reach out to us. Like, we know it's lots of information, but we're passionate about it. We want to bring us education, the software, the market. Download the slides, join the wait list, create your account. Any questions along the way, reach out to me, Chelsea, or Richard, and we will make sure we take care of you.
Yep.
So,
you can chat with me right in Propertyllama. So if you have a question about the software, because we're not running the PAM now, so, I guess you'll be using it yourself. But if you have a question, there's chat. You can just send me a message. I'm the one who gets these. I'm the one who replies. Yeah. So.
Awesome. And just where do they download that slide deck, Chris?
It's all in the show notes here.
Okay.
Yeah, so go to the show notes and all the stuff in there we talked about. And in some reason you can't find it, always just email me or Chelsea and the team, and we'll make sure you get the slides in there as well. We want the information out there and that education out there, because this is a sorely needed information in the space. So everyone, thank you for listening and watching. Download the resources, plug in. Chelsea, thank you.
Thanks, Chris.
Richard, thank you. We'll see you guys soon.